here. Okie dokie, Smokey. Let's see what we got here. So, we're gonna do today the. We going into finance today?
Yeah, we should do that.
There you go. Okay, Google, turn on air. So, you got anything? You got any resources you want to use?
Let me see.
Something went wrong. Try again in a few seconds.
What's the matter, Google? Okay, Google, turn on air. Oh, I think I said Anya.
Anya?
I say Anya.
Sorry, I didn't understand.
Oh no, it's yelling from this side. Okay, Google, turn on air.
Okay, turning the
There it
on air on
goes.
again in a few seconds.
Too many Googles listening at the same time.
It's like they're all trying to take over.
There was something from CNBC, right?
So where do we want to go with this? We want to go just into real estate, or do we want to go like all finance?
We can do, they're all tying for us eventually anyway, so we can kind of talk about the banks, a little bit about real estate and interest rates. We can talk about the interest rates on the credit cards and what that looks like for, different classes of people.
All that economics.
Yeah.
Yes, sir. What's interest rates? Housing market. Fed. to the banks. Currency / on world currency. Actually, where did that? Tigers on there. This thing did? Come on now.
The keyboard dead on you?
Yeah. Just share the article with me after so I can put on the page.
Yeah.
Let's pause this. All right. What do you think, Mr. Will? You good to go?
Yeah, I'm ready.
Alrighty. I think we got a good. We have a good title for the episode?
Not yet. Something will come up.
Call it The Wolf of Wall Street?
Ooh, we could do that. It's a good one. See? I wasn't worried.
What should we call it? The Wolves of Wall Street.
Maybe we want to avoid that copyright, you know?
We're coming
out of the copy will come after.
And we're coming after like a bunch of different areas, so not just one wolf we're looking for here.
Mm-hmm.
Let me mute mic number 3 since it's not being used today. Alrighty.
Move this down then. Just, right there. Cool.
Alright, ready to rock and roll, Mr. Will?
That's good.
Alright, happy Friday, everybody. Welcome to another episode of Temporary Insanity Podcast. I'm your host, Josh Pereira, and with me in studio today, flying solo, is just my fly co-host, Mr. William McCoy. What's going on, Will?
What's going on? It's just me today.
We lost Sierra to the finals over at Rhode Island College. She was a little bit bummed. She had texted us. She was trying to make it out tonight. We even arranged babysitting. We had all kinds of stuff going on to get her here, and then she texted us the last minute. I was like, they're just passing out the test now. I'm not gonna make it.
So good luck to Sierra on those tests. I'm sure she's gonna do excellent on them either way. But yeah, I wish she was here in studio with us. But we gotta give the people what they want, which is another episode.
Yeah. Look, you know what? Today will be it for her. Then we'll have her unobstructed for the summer, and then we'll see how the fall goes. Well, you know, both you and her have some crazy schedules coming up for fall semester. But I mean, we were just celebrating her last week as she was telling us that she's on track to graduate 1 year early. So that tells us one thing: she's wicked smart.
Yeah, she's on track for sure. So no worries going on with that.
Oh man, that means she's definitely gonna be outshining at least me on this show very soon, because I am not wicked smart like she is. But so we're wishing her well as she takes her test today. I think today's her last one, right?
I believe
if
so.
I'm not mistaken, yeah. So she'll be free. She'll be free after today.
Free as a bird. And
our friends are down in Chicago picking up our other friend Kayla today, right? I think today was her last final, and she's coming home to Rhode Island for the summer. So you might hear her voice coming up on a few episodes. So we'll have some fun this summer with some temporary insanity.
Yeah, I'm looking forward to it.
But today we talk about something we've been kind of slowly bringing out over the past few weeks. Today's episode is called Wolves of Wall Street. Dun dun dun!
Multiple wolves.
Man, I really got to figure out how to use, for those of you watching us on the behind the scenes, I mean, we have these cool pads here. I know these buttons do something. What's this one do? Oh, I think it's people cheering. Yeah. Oh, it goes for a minute. There it goes. Yeah. So, I mean, I got to put some cool sound effects on here. So, yeah, Wolves of Wall Street. I mean, you know, these past few years have been nuts in the financial realm here in America, and you know, it affects us in so many different ways. It affects our lifestyles. It affects our moods. It affects, like, I mean, fill in the blank, right? I mean, somehow we've come to a place where money and like, you know, like our ability to purchase things or invest in things or has just affected everything. I mean, what do you think, Will?
I mean, unfortunately, we live in a society that's run by money. So if you have money, you're able to do more things. Therefore, you might be, you know, I wouldn't say happier, but, you know, it's a lot less stress the more money you have, I've been told. And, you know, when people who are higher up in these banks and in government start playing around with money that gives people a little less in their bank account every month, you know, things get a little more stressful.
Yeah, I mean, and I get it. Listen, I get it. You know, it's and trust me, as someone who I'm a hustler, baby. You know, like I work a lot, and unfortunately, God has blessed me in many different ways. But I get it. It's nice to have a little bit of a comfort zone. But I also remember what it's like, and I know what it's like to have to be, you know, hand to mouth. But, you know, one thing that I want you to learn through this episode, if you can, and if you're listening today, and maybe you're living paycheck to paycheck or you're really struggling, is that, you know, there's so much more to this life than money. You know, like, well, that's easy to say. Trust me, I've been there. I'm there many times still today. Sometimes I make some really big swings and I get really big misses. Ask my wife, she'll tell you how many times we're playing the catch-up game or we're scrambling to try to make up for a missed investment, you know? And, you know, one of the things that happens is you start to learn that money isn't everything. And economics, no matter how the economy goes, you know, in the world it becomes a hard blow. I remember back in 2008 when the economy had the huge tank, the ground fall out from under it, you know, this huge tank. And you saw like these wealthy men jumping off buildings, right? Like just, you know, I mean, their whole world was wrapped around the economy. Their whole world was wrapped around their bank accounts. And I was just like thinking to myself, like, how sad is that? How sad is it when your whole identity is wrapped around finance, wrapped around what you have in your account, wrapped around status of your house or your car or your possessions? You know, instead what I want to invite you to do is think about it in this different perspective. And we're going to have this conversation today. We'll talk about interest rates and the housing market and the Fed. I mean, we'll talk about different... And for those of you who are listening, you're like, oh, this sounds like it could be boring. We'll make it a little bit fun for you. But I mean, you should know what's going on financially with this country, because a lot of it has an agenda behind it. A lot of it has different motives. You should know what's happening as believers, because a lot of it shows you signals of what's coming. But you know, you shouldn't be too preoccupied, because our security doesn't come through a financial status. Our security comes through Jesus Christ. And it was sad watching as people, you know, become so depressed about finance, because we have a God that we serve, and He is the true King of Kings and the true Lord of Lords, and we serve Him, and He promises us that we will never go without. You know, in Matthew it teaches us that if the birds are fed and everything of nature is taken care of, then why wouldn't God take care of us, right? I know I say it very loosely, that translation, but that's basically what He said. If God takes care of everything in nature, then why wouldn't He take care of His prized possession, which is His creation of man, right? Mm-hmm. Like, so why are we worried about money, right? I mean, granted, yeah, it's nice to have. I'd love to have a Bentley and like a huge house. But what do I need that for? Because my security comes through Jesus Christ. Because there's gonna come a day where I'll be with Him. We don't need to worry about that. Fret not, my friends, because God has everything under control. Maybe you're going through a fiscally hard time right now, and you're stressing out and you're losing sleep over it. Why are you losing sleep? God has everything under control. Maybe the repo man is knocking at the door. Fret not. God's got it under control. Maybe He's going to take your car that you couldn't afford, but God's going to open the door for you to get a car that you can. Josh, that's cold, man. It is. Sometimes
that's also life sometimes.
Sometimes God's got to teach us some hard life lessons. I went through some of those lessons very, very swiftly in my life, and we'll share some of those stories throughout the program. I mean, Will, it's tough. It's tough when we go through these financial things.
It is tough, and I think we should give a disclaimer really quick, just in case. We are talking about finance, but neither me or Josh are finance experts, and we will not be giving out any financial advice. So do not come after us. We're not going to tell you what to invest in or anything like that. Just covering our backs in case someone says, well, you guys said I should sell my car to get it. No, we're not saying that. We're just going to give some, examples, personal examples, and just talk about, a little bit of the financial status that's going on around the world and kind of try to even figure it out ourselves while we have this conversation.
I mean, it's going to be some good old-fashioned common sense. And honestly, from my perspective, as a small business owner and entrepreneur, I'm going to give you not the things that I did right. Most of it's going to be a lot of things that I kind of did wrong, and I had to learn the hard way. Let me start off by sharing a verse with you in 1 Timothy 6:10. And this verse is kind of what I've lived my life by, because, and I may have lived my life a little bit too much by it, according to my wife, because I give a lot of the money away. Easy come, easy go. It comes into my hand and it goes right back out of my hand. For the love of money is the root of all kinds of evil. And some people craving money have wandered from the true faith and pierced themselves with many sorrows. I heard this verse when I was very young. And, when we're young, we become very ambitious, and we want to be like, when I was a kid, there was this show called MTV Cribs. I mean, do you remember that show, Will?
That was actually a fantastic show. Back MTV was still good.
Yeah, now, if you're listening to this podcast and you're one of this young generation, the Gen, I forget, the Alpha guys, whatever that generation is now. I mean, you guys have no idea what we're talking about. You guys don't even know what the real MTV was. But, I mean, this show, you'd watch it, and you'd go into these, super wealthy people's homes, and they'd show you, all these... So, when we were young, we wanted to hustle. I mean, our dream was to be, we wanted to be ballers. It was baller status, and we'd watch this show, and instantly, we wanted to have it all, right? We wanted to have the big fat wads of cash in our pocket, and the big thick chains, and the Rolex on our wrist.
7 cars in the backyard,
right?
With all the rims on it, yep.
The rooms that made no sense, we had the bedroom, and then we had the room for this thing, and then the room to have a room inside of a room inside of, but it was one of those things where people started to fall, and so people started to fall in love with the idea of just having money, and that hasn't changed. I mean, I talk to people sometimes. And their lives are falling apart because they are so in love with money. And the reason I want to start with this point is because the rest of this program is not going to make sense to you until you understand what I mean by this verse in 1 Timothy chapter 6. The love of money is the root of all evil. And some people craving money have wandered from the true faith and pierced themselves with many sorrows. So these people, they spend their whole lives, they work the 2, 3, 4 jobs, and they kill themselves, and they slave away to make this money. And granted, yes, they have these nice things, and they have these big houses, and they have these fancy cars, and they have this facade of this wonderful lifestyle. But behind it all, it's shallow, because all they have is a love for money. And behind this facade of this lifestyle, what do they have? They have emptiness and nothingness. They don't have a real love for family. They don't have a real love for themselves. They don't even have a real love for God, because all of their love is consumed by what? It's by the money. And so I started the program by talking about how in 2008, the financial crisis came, and you had men jumping off of the roofs. Why? Because all of their love went to money, and they had nothing else. And so what happened when the money died? They died with it.
I mean, there's the saying, right? And that everyone uses believer and non-believer, selling your soul to the devil, Right? What does that mean? That means you go against your morals and every, good fiber in your being to get money, get fame. And like you said, then when you get all this and you're at the top and you look around and you're by yourself and the Bentleys and the multiple mansions don't really mean much when you're empty and there's nothing around. There's nothing else can fulfill you, right? That's why I would love to have $1 million. Would I want to be a billionaire? Well, no, because then once you can buy everything, what's left?
Well, listen, I don't know if I'd go that far, and don't take what I'm saying wrong. I'm not saying that money is the root of all evil. Listen to the words that I'm saying in this verse. The love of money is the root of all evil. Money is not the root of all evil. It's the love of that money. Because, you see, when you love money and you make money your God, that's where the root of all evil starts happening. That's why these people become depressed and sorrowful. I mean, I thank God that there are wealthy believers in the church, because those wealthy believers have the means to help push forward the kingdom work, right? I mean, look, if God's going to bless you, God's going to bless you. I'm not hating on wealthy believers. I'm not hating on people who do well in life. I'm not hating on anybody. That money is not the root of all evil. It's that love of money where everything comes secondary to the almighty dollar that becomes the problem. So, why do I start off with such a strong point? Don't love your money so much that you can't enjoy it. Look, I can't tell you how many times I'm in this office counseling people who are going through issues with whether it be their spouse, their marriages are falling apart because, we don't communicate, we don't have a relationship. That, my husband or my wife, they're so consumed by work. It's all about the dollar bill. Like, all they care about is making money. Or they don't have a relationship with one of their children or a family member because we don't have a relationship because all they're consumed about is working or making money. I mean, I can't tell you how many different scenarios I find myself in where I'm counseling somebody because the wedge is driven between them because of a love for money. I can't tell you how many times I'm talking to people and they're depressed because of money. The love of money is the issue here. Now on the opposite side, I can tell you from a different perspective. I can tell you how many people are so happy and joyful, and they're poor as heck. They got no money, but you know what? God sustains them. By the grace of God, they are sustained. They have what they need, and they're just happy. They love their family. They get this. Now, I'm not saying that you should just go out and be poor or whatnot. I mean, listen. Don't talk. I'm not talking to you like a socialist or I'm not taking like a page out of the liberal agenda. What I'm telling you here is there are things to life that are so far more valuable than money. A relationship with your family, a relationship with your kids, but most of all, a relationship with Jesus Christ is the most valuable thing you have, because whether you're rich or poor, no matter what you have, a big house or a small house, an MTV Cribs house, or what was it back, the Lincoln Navigator with the spinning rims, right?
Huge Lincoln Navigator,
yeah. Or you have like just a little Pinto. I don't even know if the kids these days know what a Pinto is.
They definitely don't. There's no way they know what a Pinto is.
Would that be like? Well, Kias are nice now. I'd be like, or a little Kia, but now the Kias are nice.
Yeah, there's no comparison.
It'd be like a beater, like whatever you guys call the beaters now. Like it doesn't matter what you got. A relationship with Jesus Christ carries you through everything. Now, why am I setting you up with such a foundational monologue slash dialogue with Will chip it in here on this intro? Because what we're going to talk about today is a little bit crazy, because things have not been so peachy keen. The 50s and 60s mentality, or the 80s Reaganomics, where this country was once that beacon on a hill, that shining light, the almighty dollar was the greatest in the world, is not what it once was. I mean, we'll be talking about things today like interest rates and the housing market. We'll be talking about the Fed. We'll be talking about the banking crisis. How our currency, even the almighty dollar, it's not what it was. America's even talking about joining the world in like the centralized bank with like a one world currency with bigger nations like the super nations, like Russia and China. I mean, we have things happening where money's becoming an issue, where they're holding the Supreme Court hostage. 13 hours ago, the Democrats came out and they started to threaten the Supreme Court. By saying, hey, if you don't start aligning with some of the stuff that we want to see come through your court system, we might have to hold your budget hostage.
Which is the crazy thing to even like put out there.
Yeah.
If you don't do what we say, then you're not going to get basically your budget.
Yeah, we're going to control you by the purse. It's called the power of the purse. So, I mean, so this country is headed in a very dangerous way when it comes to money. I mean, guys, it's a scary time. So, even just in my little introduction of what we're going to talk about today, just remember, Jesus is there. God still reigns. Jehovah Jireh, which is one of the names for God, which means our provider. God is our provider. It doesn't matter what we talk about today. If you hold on to the hand of God, everything's going to be all right. Yeah, I know, it sounds very Bob Marley-ish, right?
It does. It sounds very kumbaya, very, just let God handle it. God got your back. Kind of like you don't have to stress all the time, Make a budget, see what you can't afford, maybe cut back in those Dunkin' runs and those, go out to you all the time. I think you'll be okay, most people,
Listen, I'll tell you right now, man. We went years ago. It was a long time. We went on this cruise to Jamaica, and man, we went on this bus tour. Yeah, it wasn't a bus tour through the cruise ship because they told us, they said, you know what, they have bus tours through the cruise ship. But you could probably spend a quarter of the price if you walk about 50 yards away from the cruise ship. They had private bus tours from the island, just as nice, and actually they'll take you to a lot of cool spots. So my family and I, we went and we booked a bus tour off the cruise ship, and they took a great tour. I mean, it took us all over the island. We went to all these cool places, and we went to one of these spots at the top of the island, and this homeless guy was there. And he was the coolest dude, man. Came with his guitar, and he just started strumming the guitar. And it was like probably the best $10 that I ever gave a guy, because I mean he earned it. I mean I only had a 10 spot on me, so I was like, all right, it was kind of a generous tipper. I looked like a baller that day. I looked like one of the guys from MTV Cribs, but I was really like not. I was
all I had.
Like all I had, But he came in, he started strumming the guitar. The guitar was kind of out of tune, but he's like, don't worry about the ting, every little ting is going to be all right. He's singing it all out of tune. And I mean, he made my day. But, with God, it's kind of the same thing. Don't you worry about a ting. Every little ting is going to be all right, But it's scary. I mean, it's very scary. I mean, watching the news, and if you watch financial news, one of the businesses that we have in our portfolio is a real estate company. And I mean, the housing market's been really flipped upside down these past couple of years. It's been crazy. I mean, you work for Rhode Island Housing, so you've seen a lot of that on the back end as well. I mean, it's just been crazy. I mean, in order to try to stabilize the market, I mean, the feds have been throwing all kinds of grants to try to get people to just stabilize it because it's what else can they do? I mean,
it's nothing you can do, and it's tough because a lot of people. And I learned this from even high school. I was fortunate enough to have a liking in finance and accounting, so I kind of learned these things as I go. But they don't really offer people too many financial classes for people to learn how interest rates work and how the stock market works. So when they see these things going out of control, things they might not have even like a basic understanding of, because through basic schooling you don't get this education, it looks a lot scarier than it is. Because if you look through history, and it is bad now, I'm not going to try to undermine it, but the economy goes through these waves, some waves worse than others. And basically what you're seeing now, at least the Fed's trying to throw, grants to have, the housing market kind of stabilize, so where it's not, you're paying twice as much for a house and the interest rate is, I don't know what it's at now, almost 8%, 9%.
I mean, it's touching 9% depending on your credit score, man.
Right, and you hear that and you're like, well, this is crazy. It's like, unfortunately, this has to happen. So maybe, hopefully, we'll get to a time, not too far in the future, where you'll get more stable interest rates and actually pay for a house or what it's worth. And that's kind of like the bubble the weird bubble we're in, where it's like if you want a house now, you're gonna pay through the roof. And what's not helping is that in some places people are lining up to buy these overpriced houses.
Well, you said something that makes a lot of sense. Look, and it's something that I've said with my friends for a long time. You go to school, they require, like in high school, they require you to take a certain amount of maths, right? So I remember, like, they made me take algebra, and then like some people make it all the way through like calculus and all that stuff. But But they never make you take like common sense math. Like they never take you to, like you're right. They should make you take like a personal finance class. Like most kids get out of high school, they don't know how to balance a checkbook. They don't know that when you get a credit card, that it's not just a matter of sweat. I mean, how many 18-year-olds look at these vultures at the colleges, right? They come with their tables. They offer these college kids a free frisbee if they apply for a credit card.
Yeah.
And then these college kids like, sweet, free frisbee.
And free money.
And free money,
Yeah.
right? Because they don't understand the concept of the swipe, right? And honestly, that's the problem with most Americans. There was an article I read the other day. I'm going to have to see if I can pull it up and post it on our page. But there was an article that I read the other day that we have hit an all-time high, a historical high with credit card debt in this country. Americans as a whole don't understand that you know, like Americans as a whole, we've never swiped this much credit card debt. Like we have gotten away from the concept where if you don't have the money in the bank to pay for it, you don't buy it. Instead, what we've done is we'll just charge it. We have programs out there that allow us to do that. I mean, how many like everywhere you go, like Affirm, for instance, and Affirm, if you want to sponsor us, we'll take the sponsorship. But like, you can literally go to any website, and it's like, all right, you want to buy this today? You can either pay for it, or then you have like the little Affirm app, and it's like, or you can make it in like 6 payments through Affirm. You know, doesn't even hurt your it doesn't even hit your credit half the time.
And I used Affirm when me and Rachel bought our bed. Cause it's like, why, $1,500 now, and we were like doing stuff for the house and stuff. It's like, why get rid of the cash when it's so more convenient? It's so much more convenient to do Affirm. They break up the payments, which is fine, but not a lot of people are financially disciplined to have that money aside to make those monthly payments.
Well, because here's what they don't tell you, because what they hit you with, and this is the thing, and this is why I'm saying, like in high school, they should offer they should make it where every kid has to take a personal finance class. Mm-hmm. Like I remember, like even Rachel, when she was a kid, like she got her first 0 interest credit card. Oh, 0 interest. Hey kid, they give you 12 months of 0% interest. Well, the way I've always done it is I pay it in 11 months. Well, why? They give you 12 months. Well, let me tell you a secret. If that payment is not made in full by that 12th month, on that 13th month, you're accumulating all the interest that you didn't pay. Yep. Because that's how it works. Like, so when you get a 0% interest credit card or a 0% interest payment, it's got to be paid in full within that term. Otherwise, the small print tells you you're going to get hit with all that interest.
Because it's deferred interest, but they just think it's interest free. No, it's deferred interest that will be, given to you at the end of the 12 months if you don't pay up in what you should be doing 11 months.
Right. I mean, so it's like, and again, we're not here as financial experts to tell you how you should do it. And this is not a Ponzi scheme. We're not going to ask you for money for this is free advice. So if you take some of this advice, it's not even advice. We're just giving speculation, all right? Let's not call it advice. We're not telling you how to take care of your finances. But we're just trying to be a little bit insightful as to how the world works, because a lot of people are just blind to it. And what happens is we dig ourselves into these holes, and then we find ourselves with a $500 credit card like these kids do, right? So these kids get these free frisbees, they open these credit cards, they swipe. Now back in the day, you used to be able to get a credit card for like 12%. We thought that was high. But let's be real. APR on a credit card nowadays goes up to 36%. A kid with no credit history, so no job, no credit history. So a student in college is getting a credit card, they're getting like 36% interest. That's crazy. So you get a $500 credit card, and you're paying off that $500 for like what, 5 to 7 years?
Yep.
So that $500 has cost you like $3,000. It's legal robbery.
And it's like, it's not things that are like a necessity. Credit cards, again, even when I was growing up, my parents said credit cards are for necessities. Now credit card companies try to switch. It's like, oh, use it every day, you get cash back points or whatever. But my parents are like, oh, credit cards are for emergency situations only.
I think when it comes to the credit card world, it's all based on how you're going to use it, right? Like for instance, on the personal, when I was growing up, my dad used to live by, and a lot of old time Christians used to live by the Dave Ramsey envelope system. So like basically like when you were trying to get yourself to save money and stuff like that, the way that would work, and if you're having financial hardship, you can look it up. It's called the envelope system. So basically, you take your paycheck every week. The first thing we took out of our check was our tithes and our offering. Yeah, I know. Like for those of you listening who aren't believers and stuff like that, you're like, oh, here he goes with the church. Well, yeah, we believe that God gave us the ability to work and the health to work, and that God blessed us with our jobs. So the first thing we do is we give back to God. And honestly, God has never failed me. That no matter what, that's the first thing I do every single week. That's the first thing I do is I give back to God. And I'll tell you, and I have some stories about that we'll share in a little while. But like some situations where it's like, oh snap, like I find myself in a pickle, and God just never ever failed. Now, am I saying that I bought God off? No, but God's faithful. God's faithful. So in this envelope system, that's how it used to work. We get our paycheck. The first part I would take out of the paycheck in the first envelope was the envelope for the church. It was my tithes. And then each envelope had our bills. Like, so, we knew how much we had to pay out every month, our overheads, right? And it would be broken up by those envelopes. So every week we would take the money from our check and put it in each of the envelopes for the bills. At the end of the month, all the envelopes were filled with what it needed for those bills, and then whatever money was left over, like with us, we would put a percentage into our checking for spending and having fun, and then the rest of it would go into our savings account. And guess what? We always had money in savings, and we always had money in the checking to do some fun stuff. I mean, it wasn't lavish. Like, you couldn't really do anything crazy. It's not like we were going to buy a private island or anything, but
Bills were paid.
The bills were paid, and the checking account wasn't bouncing. Credit cards, like you said, were for extreme emergencies. Like, mom lost her job, or you had to float, like a big emergency, like the car would break. You need to, as time progressed, things changed a little bit, right? And so credit cards started offering you like the points and the miles and stuff like that. So I mean, I get it, but it was still, even when we started using credit cards, like in my house, if I use a credit card for rewards and such, at the end of each month, we pay that entire credit card off. Like, we don't carry a balance from month to month in our house, because I believe paying interest is a sucker's game. I mean, unless you absolutely have to. I mean, that interest. Why? Why am I paying interest? I'm not buying something unless I have the money. And if I'm financing something, it's through a structured financial, a financial agreement. Like, why am I going to pay like a crazy interest rate on something like that? If you're making a purchase, you purchase it through a structured payment. So, we use credit cards in my house for gas. Why? Because if I use the credit card, I get 15 cents off a gallon. So that's the Portuguese in me, right? Like, I'm trying to. Gas. So, I use my credit card to buy gas. Well, guess what? At the end of each month, that credit card I use for the gas gets paid in full. We don't carry it over for the next month. And we try not to use credit cards for much anything, but the ones we do use for stuff like that, we use it. We accumulate our points, we get our discounts, but every single month it's back down to a zero balance.
What my parents used to instill in me when I was growing up, I had my first credit card. Same thing. I was 18. There was a $500 limit credit card, starter credit card. My parents said if you, because building credit itself is a little bit of a scam. They changed it a little bit now, but in order to build credit, you have to go into debt and then prove to the credit bureau that you can pay off that debt. So it's a little scam to begin with.
Well, you're trying to build a credit history and a clean credit history, which is great. But that's why you have to live by if you don't have the money to buy it, then don't swipe.
Right. So I was young, 18. Had a part-time job. Well, kind of foolish. I worked a lot of hours, but so I wasn't buying anything crazy. I was buying clothes, sneakers. So my parents like, if you save up money for sneakers, say sneakers are $150, and at that point, I was instilled to being very disciplined with my finances. So except for spending that $150 in cash, put it on the credit card, and make sure you take that $150 that you already saved that you're going to spend on the shoes in cash, pay it for credit card. So I do that, once in a while. I put $150 or clothes, whatever. Make sure I already had money I was going to spend anyways, pay off that credit card. And I do that over and over again. That's how I end up building great credit. And it was actually funny. The first time I went to go finance a car, I was young. I was under 20, and I was at Toyota, and the guy was like, "All right, I was getting a new car." So the guy's like, "Oh, Larry, let me check your credit." And he came back. He was amazed. So for someone so young, have so this good credit was amazing. Like, he was amazing. I've never seen someone that young with such good credit. I was like, it's not difficult to get credit, but it's easy to get out of hand. Very easy to get out of hand with the credit.
Well, but that's the thing is, and look, I'm not trying to, because be honest, to get to that point, sometimes it takes a while. I mean, look, when I was young, you know, it was one of those things where we had to stay on top of it, right? Because like, I remember when I first started feeling the power of the credit card. Like, it's very easy to get, you know, all right, let me buy this, let me buy that, you know. But that's how they get you. Like, even today, like sometimes you go to apply for something, and like how many stores do you walk into, and it's like, hey, if you apply for the credit card, we'll give you X amount of dollars off. Like, you know, it's like, all right, like
Best Buy, Kohl's, you get 20% off, and you get 12 months interest free.
Yeah.
Interest free, quote unquote. And it's they definitely try to set you up to fail, but that's the game they play.
But now going back to the housing market, we started diving a little into that, right? So like 2000, so the thing is like, so 2008 we saw this happen, right? 2008, it was a build up to a point, because it actually started under, and you guys can fact check me a little bit, because I was really young when it all really started, but it all started under Bill Clinton with everyone, with the whole idea that everyone should be able to buy the house of their dreams, pretty much. So I'm using it very loosely, but so it came to a point where in 2008 the reason we had such a big collapse was because it was one of those things where, like, you know what, you could have a minimum wage job and you can buy whatever house you should be able to buy that big McMansion and
anything you want.
Anything you want, we'll get you approved. I mean, it was like the Wild West in the housing market back then. I mean, and so 2008 comes around, and all of a sudden people are like upside down, and things are flipping around, and it was nuts. I mean, it was nuts. So I mean, I've had people in the real estate world come to me like, oh, during COVID we saw like a lot of that craziness going on with houses that weren't nearly worth or shouldn't have been purchased for what they were being purchased for. I mean, we saw some crazy prices being thrown out. I mean, houses being really marked up because there was such a firestorm. And I had people coming up to me, and they were saying the same thing, like, oh, this is gonna be another 2008. This is gonna be. I mean, it's not. I mean, what happened after 2008 is that we went from such lax regulation to what I call some real government, like over regulation, like overreach. So I mean, I don't think that's necessarily the case. But what we do have happening now is that the feds have not just like regulated like to a crazy degree. Because I mean, anyone who's been through the housing market in the past decade will tell you, like, look, it's not like it was where you can buy a house and close in a couple of weeks. I mean, you're looking at 30 days if you're really unless you're doing cash. But if you're buying through like a standard mortgage program, you're looking at like 30 to 45 days. 45 days is more the norm if you have a good mortgage broker or a good financial institution. I mean, but then you have people that go in 60 to 90 days if they're really slow to react. I mean, so I mean, it's still a process. But I mean, on the flip side, you see the Fed really kind of using their power. I mean, they're controlling interest rates. I mean, they're not quite as bad if you want to really go back into history. I mean, when our parents bought their homes back in like the 80s and whatnot, I mean, they were buying homes at 12%. I mean, so I guess it's kind of like the styles that go around and come back, right? Mm-hmm. Bell bottoms went away, they died, and then they came back for a while, right? So
high interest rates.
So high interest rates, I guess, because we got used to having like look, when I got my house, I closed at an interest rate that was kind of high. I mean, but then I was able. My last refi that I held on to was like 3%, like between, I think it was 3 or 3.5%. So we got used to having interest rates at 2.75, 3%. I mean, so now you see interest rates, depending on your credit rating, at 9%, and people are spazzing out. People are losing. They're losing their minds. I mean, and yeah, you're at that rate now. The Fed has come out and they've talked about how. They're looking to try to bring interest rates back down a little bit. I mean, speculation is out there that the Fed's talking about bringing interest rates on homes back down to the 5% range. I mean, realistically, I mean, they give you dates and it's never quite the way it works out. But towards the end of the year we should be getting there. Does that mean you should be waiting? No, because once they do, it's going to be crazy. So if you're interested in buying a home, do what you got to do. I mean, that's why.
Be smart about it.
Yeah, that's why God gave us the refi options. I mean, that's why my clients, I've been telling them, when interest rates are low, you're fighting against everybody. What's happening now is you have the ability to buy the home that you're looking for without as much competition. Depending on what you're looking for. If you're looking for like different types of property, there's still like multis. Multis right now, at least up here in the Northeast, you're still fighting with a lot of people. But like single family home, the standard single family property, it's not so bad because not everybody's willing to do because everyone's got that sticker shock on the interest. But I mean, the Fed has this crazy amount of control, and then you start to ask yourself like why, and they try to justify. They're like, oh, we're trying to stabilize the economy because of inflation, and they take all these different variables, but realistically, it's like the big hand of government coming in and controlling this market in a way that really makes it kind of nuts for people. I mean.
And again, I think it goes back to, and I'm not trying to call people ignorant on facts, but, lack of understanding. Because you talk about things like basis points and the 30-year mortgages and with the Fed, and it's a lot of information. It's like, what does this all mean? Like, why does the Fed have to, bring the big hand to, kind of regulate the economy? Why can't the economy just kind of normalize itself? And it could, but I think that starts taking a lot more time than people are willing to wait. And it's interesting because you were talking about how the interest rate back when our parents were buying houses were up to 12%. But I think the economy has a very short-term memory because people are buying houses now. My generation, the generation maybe one above me, know the house is at 3.5% to 5%, and now they see it, at 9%, and they're freaking out like it can't get worse than this. But back in the day it was 12%, so it could be worse.
Well, I mean, the justification is that they're trying to stabilize. I mean, we see how the markets are at the moment. They're trying, like, inflation rose really quickly. The Fed's trying to stabilize things on their own way. I mean, the market itself on Wall Street is all over the place. Even crypto was doing a stellar rise. It was growing very, very strong. I'm not saying that crypto by no means is dead. I mean, crypto's definitely looking at a strong future. In my opinion, I'm not telling you to run out and buy crypto, but I mean, if you think about what crypto is and if you think about the future of the world, which is technology, and especially when you think about how the world is moving towards a centralized monetary system, for the lack of better words, in the Christian circle they call it a one world currency. I mean, crypto is definitely the way it's moving towards. I mean, look at when you go shopping today. You go shopping now. I was at a baseball game this week, and I went to go buy some food at the concession stand, and I couldn't pay with cash. Everything's digital now. I mean, it's like, and I know I've shared that numerous times, but it's becoming more and more. I mean, the value of cash money is devaluing. Digital currency is becoming the way of the future. So I mean, so when you look at the way everything's moving, I mean, it's moving very much in that direction. I mean, you look at the banking crisis. You walk into a bank and you ask them, you walk into your local branch, if you have this much money, test it out. I don't have this much money to do it, so I can't test this today. But from what I've read and researched, if you walk into your local branch of any bank and you say, hey, listen, and if you have the amount of money to do it, and you say, listen, I need to withdraw $100,000.
Good luck.
Yeah, good luck. I don't think anyone could do that for you. Like,
did we end up talking about like how the banking, like what happened with the banking crisis back when it happened? I can't remember if we did or not.
No, I think we gently broached it, but if you want to talk about it a little bit, go right ahead, man.
So the way, at least with the Silicon Valley Bank, that was the big one that everyone's freaking out about, and I've had a lot of people ask me like, why did it happen? And I actually learned a little bit about how banks work as well. But basically how most bank works, I think maybe credit unions might be a little different. They take on deposits, so they have all your money, and then what they do with a majority of your money is invested, so that then the bank can make money. And it's something you never think about, right? Because you normally you see a bank and you say, okay, banks have buildings and banks have employees. How do they pay for the property and how they pay all their employees and all their, executives who get millions of dollars in bonuses and et cetera, et cetera. And the short answer is with the money you deposit into the bank. So you see like a big bank like Silicon Valley, they have, thousands and thousands of people throwing, hundreds and probably millions of dollars into their bank accounts, and then that bank is taking a large chunk of that money and investing it. So now when people go and the stock market crashes, and then people try to take out like $100,000, and the bank goes, well, we don't have it because it's tied up in investments, and then that word gets around, and everyone tries to bring all their money out of the bank then crashes because they don't have enough money to give back to the people.
Well, and then you see like the big crisis is like it happened during the Obama president days. Where you have the bailouts. So unlike us, where when I make a bad investment, I just lose my money. Like I made a horrible investment with Dogecoin. Because I thought Elon Musk was going to go on Saturday Night Live and talk it up, so I bought it thinking it was going to hit $1, and I squeaked up to like 85 cents, and I should have sold, man, because at 85 cents I was making a killing, and before I knew it, here I am. I get excited when it hits 9 cents now, but if I was a bank, at that time, I would have gotten a bailout, Look at the different motor companies, same way. But with the banks, it's crazy how it's like it's all about perspective, where you stand on it, right? Like as an individual, you make a bad investment, and you gotta take it, you gotta deal with it, man. Like as an institution, a big brother comes in and helps you out. And look, I'm not trying to sound like a conspiracy nut or anything, but I'm just talking about like. Where does this all come from? Because at the end of the day, what happens is somebody's got to foot the bill. Silicon was the big story that happened about, I want to say like 4 weeks ago. We shared a little bit on the show. So if you go back 4 weeks, I think I posted an article about it. We didn't really go into too much detail, but there is an article on our podcast from that week. I think that was the March Madness episode, if I'm not mistaken. Madness, yeah. But that's what happens. So realistically, when you're looking at the way the world works with money, there's a reason why everything's moving towards cryptocurrency, the digital currency age. Because guess what? Now with digital currency, it's a different thing. Yeah, it still rises and falls in value. It's evaluation and all that stuff, and that's a whole different technical thing that we can get into. But it's just.
It kind of goes back, in the way I kind of try to rationalize it, and try to figure out what crypto is. It kind of goes back to like primitive age, because crypto really has no regulation. So like NFTs, which was a whole big thing, right? Whatever. So you can say I have an NFT and I think it's worth this much in Dogecoin, right? So back in the day, you're like, oh well, I have a bushel of carrots. I need some clothes, and you trade them, right? It makes no sense if you think about it. How do clothes and carrots equal up to each other? Well, they don't. But the people back in primitive times were making the rules. It's kind of the same thing with crypto as it is in its primitive stage. You have something that's an NFT. You make the price. You say it's worth this much cryptocurrency, and then you trade, and that's really all it is. There's no regulation to it, which is why it's so versatile, and why it crashes so often. Because there's nothing that says a cryptocurrency 1-to-1 equals this, like how we did have with the American dollar. Right? It was this much gold was in this. It was this much paper. It's not like that with crypto. It's whatever they say is whatever it's going to be, and that's kind of why it's all crazy, and it crashes all the time, and people go mine it and get more, but then they can steal it from people with no regulation. It's nuts.
Well, but you nailed it right ahead. See what's happening with the U.S. dollar is that we left. It's been happening slowly and now a little faster as of recent years. It started when we left the gold standard. See, the United States dollar used to be so strong was because it was valued by the gold standard, meaning up until I think it was 1972, if I'm not mistaken. And again, you can fact check that. You can just do a quick Google search and you'll find it. Our currency was based on the price of gold. Now, had we never left that standard, our currency would be worth a super amount of money. I don't know if you've seen the price of gold, but the ounce now is outrageous. walk into any jewelry store, try to buy just a simple necklace. I mean,
Yeah, got thrown on credit so much.
you're telling me. I mean, it's one of those things. It's like I like to when one of my nephews or my nieces get dedicated, so I like to get like a little cross chain, and it's just a little keepsake thing. It's just something we do for like kids in our family, and it's like, man. As more of them get born, I'm noticing the prices.
Don't start cheaping it out now.
Nah, man, you gotta hurry up and have your kids, because they get more. I gotta start I'm gonna have to start like selling kidneys soon to buy these necklaces. But think about. But I look at it, I'm like, wow. When we had our currency on the gold standard, I mean, no wonder we were like the strongest dollar in the world. I mean, it was supported by something, Then we started taking it off that standard, and we just started, because we needed to start producing it, mass producing the dollar a little bit more. It got watered down. It's like anything else. I mean, so. It's one of those. It's tangible, It's tangible. I mean, it go like we started saying. Like, look, you work on the banking side of things. So I mean, you see how this all comes to fruition on especially on the housing side. Like, like these grants come through. Like a lot of these people, we're slowly going through this process and this slope where, and don't get me wrong, I think that a lot of these programs that we put out are great for like first time buyers and all that stuff like that, but we have to ask ourselves, like for instance, Rhode Island just gave I don't know if the program is still going on, but I know that recently we had a $17,500 down payment assistance program for buyers.
That's going strong.
Yeah.
Strong.
So that's great. All right. So now let's look at the average cost of a down payment on a house. The average cost of a down payment is usually about $12,000, unless you buy something crazy big. So if you need $17,500 down payment assistance, you're buying something really, really expensive. Unless, and I'm not sure the stipulations, because I don't like I said, on the real estate side, I tell my clients, I'm like, I help you buy it, I negotiate the house, but I'm not the money man. That's what the mortgage people are for. But they tell me how much you could spend, and I negotiate for you to spend it. But $17,500, and then the stipulation, and you can correct me if I'm wrong, because you process those, don't you? So you probably know more of the details than I do. But the stipulation on those is like, you have to live in the house as your primary dwelling place for a minimum of 5 years, because it takes a secondary position to your mortgage. So you get the mortgage. So let's say you buy the house for $450,000. You owe a mortgage on the house for $450,000. Then you have a secondary mortgage attached to the house, or which is technically a secondary lien that you don't have to make payments on. It's for 5 years, as long as you live for whatever the amount is. So let's say it's
5 years.
Yep. So it's $17,500. You live in the house for 5 years. At the end of the 5 years, they send you some paperwork. You prove that you've been there the 5 years, and then they forgive you that $17,500. So it's not free money, because what happened is, and the reason they do that is because years ago when I first started in real estate, I've been doing it for about a decade now. But when I first started in real estate, they used to have these programs, and people would buy the house and stay in it for about a year or so, and then they'd flip them. So they would take the free money, and they would take advantage of the government programs. So now you stay there for 5 years. They figure if you're there for 5 years, I mean, now you're in there for the long haul. That usually means you're going to be there for. That's a long time for an investor. Investors don't want to be in a house for more than like 90 days if they don't have to.
Yeah, you're living in the house
Right.
for 5 years. You're not going to flip it.
So now you have your house. You get your $17,500. But so now my question on that is, and again, like it's great. And if you can take advantage of the program, go for it. I mean, that's what it's there for. Two things. I always ask, where's the money coming from? Okay, it's got to come from somewhere.
It comes from the government, which comes from the taxpayers. And it's,
Right.
That's how it works.
But you get where I'm coming from here. Mm-hmm. And two, if you're taking advantage, what are the qualifiers? Because see, like I'll send people to ask about that. Because I said, my job is to advocate for all my clients, but does everybody qualify for the $17,500?
No, and I won't speak so definitively, because again, I'm also like the money guy. I don't know the full details of exactly how all the grants work, but there's usually a household income portion to it. If you make under a certain amount. Like it's like if you're single, make under a certain amount, or joint, make under a certain amount. That's how you qualify. But yeah, no, it is very interesting because there's a lot of grants that come through, and most of them now are the forgivable loans. So like you said, if you move out in a year or 2 years, you have to front up the remaining balance on whatever the loan they gave you. So I do appreciate that they're not letting people kind of get over on them with free money. And for me it's a little of a dilemma because the people that I see people's information. So I mean, it's people who need housing. So it's not like it's someone going for their third house and like, oh, I'll go for the down payment assistance. So it is people who are in need, but it gets tricky when it comes to any government programs that help the citizens. 'Cause it's easy to manipulate it, right? It's easy to take advantage, and that's kind of where you have to make sure. I was like, is this person buying a house?
But isn't that how we get into and this is what I'm saying. So I want to buy this house. It's X amount of $1,000. So if you're getting up to 17.5 on down payment assistance, and the average cost of a down payment on a house is like 11 to 12 grand. So I mean, 11 to 12 grand on a down payment, that usually covers a house, at least here in Rhode Island, up to like 450 grand, maybe even $500,000 as down payment.
Mm-hmm.
So, all right. So now you're telling me that you can get up to like $500K on a house down payment. But you're telling me that you can't afford the down payment on the house. So I'm going to get down payment assistance of up to $17,000. So if I can't afford to put the money down on a $500,000 house. The mortgage payment, roughly, I'm just going based on some pre-approvals that I've looked at over the past week or so. A mortgage payment roughly on a $500,000 house right now, these current interest rates, is about $4,600 a month.
Mm-hmm.
So I can't afford to pay a down payment of $17,000, which is more than the down payment on that $500. So I mean, I would only really need so that's 3 months worth of mortgage.
Mm-hmm.
I can't afford 3 months of mortgage to buy the house. So can I afford to pay for this house for 5 years so that loan is forgiven? Because where they're making that money back on is the interest, right?
Yeah.
That magic word, the interest. So the government, I mean, essentially is like, okay, we're going to front you the 17 grand because we're going to make that money back on interest. Because let's be honest, the first like 10 years of your 30-year mortgage is really front loaded. It's interest payments. That's where they're making their money. So for those of you buying a house, here's some free advice for you from a guy in the real estate world. Make as many extra payments as you can towards principal. If you could throw $100 a month towards your principal, and write on that check principal only, you would not believe how much quicker your payment your house will be paid off. You could shave like 10 years off that thing. But
again, that's something that they don't teach you in school.
Right. I mean, I tell my clients all the time, like extra money that you have, you put in a savings account. You're making what 0.005% money on that.
Mm-hmm.
Extra money you have, if you could afford to part with it, put it towards your house. I mean, there's nothing like paying your house off in 15 years or 20 years, because then you have that mortgage money's in your pocket. I mean, it's a great way. You're living mortgage free.
Especially with mortgages being so high.
Right.
You want to pay that off as soon as possible.
And again, I'm not saying anything to look. Everyone should live the dream, but but I also don't want to see people getting kicked out of their homes. Because another article I just read was saying that we have so many foreclosures out there that the banks have, especially like in the commercial world. In the commercial world, COVID was a big factor for this. The banks have so many bad loans, right? So, but here we are. We have bad loans. We have the feds giving out all this incentive to buy houses that people can easily flip, get turned upside down on. I mean, granted, we have regulations and all that in place, but we're still we're walking the slippery slope. So okay, so now if I can't really afford to buy the house in the first place, and it's like, okay, great, we have this incentive in place, but I have to wait 5 years so that I can get it forgiven. But let's say I can't make the 5 years. Now there's a contract in place that says I have to pay it back because I didn't stay there for 5 years, but I couldn't afford to stay there. So how's the government going to get their money back?
I know some of them, and this is usually for like the people who are more on the poverty line. They do have loans that you can like stack on top. Like they'll give you like a I don't know if it's with the 17.5, but they have loans where like they'll help you with like first down payment, and then they'll like pay like part of your mortgage. So I mean, and the same thing, like kind of like a forgivable loan. I think that's more of like getting people, like an initiative to get people off the streets and get them some type of housing. But that's strict too. Like you have to make sure you have to prove that you have a stable job, and that you like if you're out of the job, you have a certain amount of time to get another job, or like they take away the loan. So I mean, it is tough because like, you want to help people, but then again, it's a slippery slope, and then you have bad loans because these people can't pay.
Right, and then it's like, well, but then we're gonna come in. Then they tell you, and in theory, it sounds great. Oh, but if they don't pay us back, if they don't stay in the house, or if they this or they that, we're gonna come after you for our money. Okay, but if I can't afford to pay you, if I can't afford to stay in the house, I leave the house. How do you get your money back? Well, here's what. What stops me from filing for bankruptcy? What if my house doesn't have enough equity because I bought it in the height of COVID, and now it drops 13%, like most houses have dropped in the past year and a half. You know, so I bought the house for $450, but now it's only worth $425. You know, so you know how am I going to recoup? Because the only way the bank's going to recoup on a foreclosure is if the house holds its equity or makes some equity so that it can. So I mean, these are the things I'm talking about. Like our financial status in this country, and not just in this country. I mean, this is kind of a worldwide thing, but really in this country, is kind of upside down. And the thing about it is the government uses money as power. Look at like we started talking about a little while ago with the Democrats threatening the Supreme Court. I mean, and we're gonna have an episode. Maybe next week we'll be jumping into it because it was something that Sierra was really passionate about, getting into a law episode, but. I mean, the Supreme Court has really been ruling a lot in favor, favorable rulings towards like things that we believe in as a church, and that's been making the left really angry. I mean, because it's things that don't align with their social construct. So I mean, now they're threatening the purse. So again, you see money being used, right, as a way to control. Money's the love of money is the root of all evil, but money could be used for evil too, right? So it's a way of controlling. Think about how many times in life people use money to control. I mean, think about how a lot of agendas get put into place through the use of money.
And bribery is huge.
Bribery is huge. Well, think about even the way government does it as a way of control. I mean, and again, I'm not trying to sound like a conspiracy, and I know that I come across. It's
theories. We're not saying anything.
Yeah.
Definitely.
And I've been very clear on the program. I am a conservative, but let's think about how government has used money as a form of control. Let's think about how even in recent time, you know, we've used money to control the citizens of our country, like through social programming, through the promise of giving you this or that, right? You know, even through we just see it. We see it all over the You know, we've come to a place where our citizens have become very dependent on the handout.
Dependent, yeah.
Right, we become dependent on what's the government going to give me. Right now in the housing market was just an example. The government is going to give me $17,500 so I can buy my house, right? The government's going to give me assistance with this. The government's going to give me assistance with that. And don't take me the wrong way. If you need assistance with things, I'm not saying that you shouldn't have it. The circumstance is there for a reason. But what I am saying is that the government is using money as a control to do what it's...
Look at it with really recently. Look at it with COVID, right? We was getting these stimulus checks. We was getting the unemployment checks, and it was the people that are coming out of their own mouths saying, "Why would I get a job if I'm getting X amount of money from the government?" And that's basically that's it in a nutshell. Why would people give the effort of finding a job and working towards something if they're just gonna get money to sit at home?
But look at it in the bigger picture. You nailed it right on the head. Look at a bigger picture. As a business owner, I look at it from a capitalist point of view. The government got its citizens so dependent on government reliance for a paycheck that it started to choke capitalism. I mean, think about how many businesses died during COVID. I mean, we made it a point, not only because, it was easy, and honestly, I took advantage of eating out because it was I justified it to myself. I was like, I'm supporting local businesses.
Yeah.
But we supported the small restaurants and local restaurants near our home. But the government made it so that people became so dependent on that check. where even now after COVID, finding jobs and like for instance, one of the articles was saying that the banks are full of bad commercial loans. Why? Because a lot of these businesses had to shut their doors, so they have all these buildings with nothing to do with them. My sister works for a company here in the state that bought up like almost an entire city to build their complexes. Well, that was before COVID. Now during COVID, they all went like pretty much fully remote. I think she has to go into the office like once a week. So they have millions of dollars of property. What are they gonna do with it?
Nothing.
Nothing.
They're eventually gonna have to default on the loan or sell the loan, or whatever's gonna happen with all their property.
There's another article on here and here's where the government continues to twist its view on our economics. CBS had an article that was showing something that the government put out through the Fed, which didn't make sense. People with good credit, high credit, those with higher credit scores may pay higher mortgage fees, so that those with lower credit will have cheaper fees, lower rates. Mm-hmm. So it goes back to that old social construct. Something that started back in the Obama days, where we'll tax the wealthy, right? So what do they do? They obliterate the middle class. I know if you're someone that sits on the left hand side, you're gonna be like, oh Josh, you're sounding super conservative. I'm not. I'm just sounding like a realist here. Okay, what happens when you squeeze the wealthy and you pander too much to the low classes? You obliterate the middle class. Those of us who sit in the middle, we could
like the forgotten middle child.
You're right, right. I mean, all right. So you're telling me, because I worked hard, like you were just saying a little while ago. You said, you worked hard on building your credit. You did the right thing. You built your credit score, but you're not a wealthy man.
No, I'm very middle class.
Right, but because you have a great credit score, your interest rates and your mortgage fees are going to be higher, so that someone who didn't do the hard work and who swiped the card and isn't as responsible as you may have been can have a lower fee. How does that make sense?
It doesn't, and here's my conspiracy for the day. I'll throw a conspiracy out there. When you take a step back and kind of look at finance, it's kind of tough when you're in it because you're kind of trying to survive with what you got. Our financial economy is a huge pyramid scheme. Let me explain why. And again, I'm having a little fun, this little conspiracy, so don't take me too seriously. But if you see the way like the class are set up, right? There's 3 tiers mostly, right? There's the wealthy, middle class, lower class. With this, for instance, with the interest, if you're wealthy, you're rich, you're a multi-millionaire, billionaire, you don't care about you having higher interest rates because you pay your stuff off anyways, or you defer your loans until you die anyways. And when you're in the lower class and you're in poverty, you're getting these good rates and you'll do okay, but unfortunately most of them will still stay in that either lower middle class or poverty level of income. And then the middle class kind of gets left behind, right? Because the rich don't want everyone to be rich, because then everyone will be rich and the rich will be rich, right? No, and Amazon is king. Jeff Bezos doesn't want everyone to be able to create an Amazon, because then Amazon doesn't matter, right? So they want the middle class to be the customers, right? Stay in the middle. Yeah, we're getting screwed, but we still get a little bit of money, so we kind of keep the economy afloat. And then the lower class, they get lower interest rates. So guess what? We'll use our credit card because we get low rates. But unfortunately, there's still low-paying jobs, maybe not as financially stable, because if you've ever been to a poor city, it's tough. It's tough. The education is tough. The jobs are tough. It's tough. So now they're spending. The economy's going up. Jeff Bezos is still becoming rich, but now the poor are still poor because they're chasing the credit card now. Even though it's low interest, you're still chasing that credit card. So nothing really changes. The poor still stay poor. The middle class who are struggling stay middle class, or they go, unfortunately some of them go and become poor, but then again the cycle begins. They get their low rates, and then might be lower middle class, and they stay where they're at, and the richer get richer. Right, that's kind of how pyramid schemes work. You have the CEO, the managers who are, they make a little more than the laymen, but they're struggling to, kind of keep afloat and working the hardest. And then the laymen who make minimum wage. They strive for more, but unfortunately, like I have a few people that I work with that have been, at their position for 30 years. 30, and they live and have kids and grandkids and stuff, but they've been in the same spot for 30 years. While CEOs, and not my company, CEOs in general, make their money and stay rich. And then the turnover people who work at a place for 6 months and get fired because they don't have the work ethic, and I don't want to go too deep into it, but that's kind of how things work. And that's like the same thing with interest rates. The rich will be fine because they'll pay it off. The middle class will struggle because we're getting the bad end of the stick, and the poor people will be happy because they're getting low interest rates. But will anything really change at the end? Not really. Some poor people make it in the world, and then a lot of them will stay in the cycle of poverty.
Yeah, but I get what you're saying, but I think it all comes down to drive. I mean, the beauty of this country is that if you want it bad enough, you can have it. Look, I didn't come from anything special. My parents were hardworking, and my parents are still hardworking till this day. I had ambition, and I'm stubborn. And I'm not saying that I'm one of the 1%ers, but based on ambition, I've been able to do something pretty decent with life, and my wife the same way, and I've seen plenty of people who have come to this country with nothing. A lot of immigrants like my parents who have come to this country with nothing, and they've done very well. They've become millionaires, and they've done really well for themselves. I mean, it comes down to your drive. It comes down to your ambition. In this country, anything's possible. But what doesn't help is that a lot of times the government, especially as of late, it's this whole thing about this socialist attitude of trying to get everybody to just fall on this heavy dependency of government reliance. They want you to be dependent on them. They want you.
It's the opposite of drive.
Right. They want you to just be, because what happens is the more dependent you become on government, the more reliant you become on whatever they say. And what happens is it takes away your ability or your ambition to become self-reliant and self-informed. Now, like, it goes back to that knowledge is power stuff, right? They want to be able to, and I know it sounds